What is up, everybody? Welcome back to another episode of The Building Code. I'm your host, Charley Birtwistle. Once again, solo, but that's okay. Courtney will be back soon. I am sure of it. Today we have Jason Kruger, founder and president of Signature Analytics. I was super excited when I saw his name pop up on our schedule today. For those of you who don't know, my background here at Buildertrend is in data science. So anytime I see analytics on the question sheet, I get extremely fired up to come into the podcast studio and talk to him. So super excited to talk to Jason. As I mentioned, founder and president at Signature Analytics. They are in accounting services. So we're going to talk a little bit about what financial metrics you should be tracking, some processes that you can implement into your business to track those better and make more data-driven, informed decisions. And at the end of the day, ultimately be more effective and make more money, which is something that we all want to do. So I will stop talking and let's hear it from Jason to tell us a little bit more about his services and how they can be applicable to businesses across the country. Hey, Jason, welcome to The Building Code. Appreciate you making the time today. How's it going?
Good. Thanks, Charley. Glad to be on.
Yeah, super excited to have you on. We always like to start these things off with just a little quick introduction. If you could tell us a little bit about Signature Analytics and kind of your background in accounting and how it came to be where we are today.
Yeah, absolutely. So the company is Signature Analytics. My background personally, as we'll find out very shortly, is in accounting and finance. And so I spent a lot of years in public accounting with some of the larger firms nationally. Most of the time was with Deloitte in one of the West Coast offices, and spent close to 10 years there, and I got exposure to all different types of industries, all different types of people, all different types of companies, construction being one of them. And so really started to build a strong foundation in that space, in that industry. Fast forward towards the end of my 10-year run in public accounting, and I just saw worked with a lot of companies that what I would say would deserve better than what they had as it related to the accounting and finance function of their business and a lot of the back office functionality. And so what I mean by that is when companies are smaller, they can get away with having the bookkeeper on board, making sure that they're paying bills, making sure invoices are going out, making sure you're collecting, have enough for payroll, and then file your taxes at the end of the year. But as companies grow, the more complexity starts to come into play. And so companies start to realize that instead of treating accounting and finance as a necessary evil, they need to shift that mindset to see, okay, how can I leverage that function to drive value into my business? And so that's where we come in, and that's where Signature Analytics comes in, is we work with companies that they don't need a full-time CFO, they don't need a full-time controller, but they need that financial and accounting leadership to work with their either take over everything, but in most cases work with their existing team to provide that support for that flexibility, scalability as they grow, to ensure that they have good information, they're getting a good understanding of job profitability. They have confidence in their WIP reporting. They have a confidence in cash flows of the business, which is critical for every business as they grow. And then ultimately, as they continue to grow, bonding, lines of credit, banking relationships, those types of things are critical. And without good financial infrastructure, it's very difficult to get to that point. So we're really working with companies that they've gotten beyond the base level of success, and now they're ready to take that next step. And we give that flexible, scalable option to do that without having to incur the costs of full-time employees and everything that goes along with that.
Yeah, I love that. I think, we've had a lot of different guests on here, and it's always funny the different backgrounds that people have when they get into construction. Kind of two opposite extremes is they're either, business that their grandpa founded, and then his dad took over, and they take over, and it's always kind of been steady state there. And they do construction really well and know how to build houses, which is an extremely difficult skill set to have, and have never really thought about the business side of things. What can we be doing better from a financial standpoint? And then the opposite end of things is you have people that come from a business background and see the opportunity to get in to a very lucrative cash market in construction, don't know how to build a home, but are very solid in the back office.
Right.
So people like you, I find really, really interesting to talk to, where you work with the people that have the extremely valuable skill set of building homes and kind of show there is a better way out there to be more profitable, make more money, all the things that you
Absolutely.
alluded to before. So I'm super excited to get into the weeds today. I'd love to hear just a little bit more about kind of your transition from, Deloitte to founding Signature Analytics. You mentioned you'd worked with some construction businesses before. Did you just see the opportunity and see the need, or what kind of drove you specifically to dialing in on the construction vertical?
Yeah, I think so. We do work with other industries. Construction is a definitely a core vertical for us, but we do work with other industries as well. But from a construction perspective, in general, I think, like you said, Charlie, I think you said it really well. Is that business owners in the construction space, they know how to build the house, right? They know how everything works. The general contractors, they have that expertise. They came from another firm where that's what they did. They grew up doing that. But in a lot of cases, they didn't have the opportunity, or they didn't have to touch the financial side of the business, or other aspects of the business, right? And so you go from being a builder and having one role within a firm to now I have to actually be a business owner. And not only do I have to do what I was doing before, but I have to, hire employees. I have to make sure I set up payroll the right way and pay them effectively. I have to, make sure I'm invoicing and collecting and can actually pay my people. And so all of that additional work and that needs to be done is brand new to these business owners. And so that's where the real value, I think, that I identified is if we can provide that confidence, that one, that the business is getting has comfort that invoices are going out, bills are being paid, and there's right oversight of that, so they're being done appropriately. Cash is being managed effectively, so that business owner can sleep at night and can manage, work on looking forward in their business, and then giving them confidence that on a consistent basis they're getting good reporting that they can leverage to make decisions off of. And there's a lot of, margins are thin in construction traditionally, and so there is though still opportunity to capture margin in different ways if you just had the information to be able to
Right.
understand what that looks like, right? So the WIP report obviously is critical in construction, gives you a snapshot of what's happening. But we have within our team, and I'm by no means the level of expert that some of the members of our team are that have spent 15, 20 years in the industry. We typically find a lot of opportunity pretty quickly to find some extra margin in some areas that that provides value to these companies. And so that's what we just love to do is talk to business owners, help to educate them, business owners that want to be educated, that want to grow, and that have aspirations to continue to build their business.
Yeah, I mean, that's awesome. I think that you hit on a couple things there that I want to dive into a bit more. But first, like, construction is just so nuanced as opposed to any other industry when it comes from a cash flow
Right.
perspective. And
Yep.
I think that's where you're hitting on a little bit is like, it's really difficult and not as copy and paste as some of the other verticals out there when it comes to accounting principles. But I was wondering if you could speak to that just a bit more, why accounting is particularly really important in the construction industry.
Yeah, you're right. I mean, a lot of it, what I like to say is accounting's the same, across the board. 95% of accounting is the same, and then 5% is the industry expertise. But with construction, actually, I think it's even the industry expertise is even more important. So maybe
Right.
it's 10, 15, or 20% is the expertise, and the rest is accounting, right? And so there's definitely nuances um, within that space that is critical for us, which is why we have a team that focuses specifically on that industry. And so, when we do that, we're really digging into the core of the business. And like we said before, I talked about before, which is the WIP report. I mean, number one, there's a couple things that we want to make sure we do up front. One is understand cash flows, right? Because in construction, the lag time can be long. A lot of times it's like, well, I'll get paid when I get paid from my guy, right? And so then if you're third or fourth in line, you may not be getting paid for quite a while. So let's understand cash flows and the flow of cash, and let's understand what our terms are, and is there opportunities to tighten up that cash cycle, because that can drag on and on and on. It's like it's the only industry I know where it's like, well, I'll pay you when I get paid, right? And other industries, they don't care. It's like, hey, I don't care if you got paid or not, you got to pay me. And so, but at construction, it's just well known that, hey, I'll pay you when I get paid. And so, how do we tighten that up is core. Having a confidence in your WIP schedule is critical, and that's typically something that companies are fairly good at because they've always had to do that. But I've also seen companies that don't have a WIP schedule in place at all, and so they're really running blind, or they're manually trying to track things in a certain way. But that gives you that snapshot of what's happening in your business, which is critical, and really understanding again the nuances and the margins and of each job, and what's driving success or lack of success in these jobs, so that you can make a decision and pivot very quickly. If you're getting WIP reporting a month or 2 or 3 months after the fact, you don't have the opportunity to pivot when a job might be going sideways. So we want to get that information as soon as possible, as real time as possible, and definitely, hopefully, more than once a month, even depending on the types of jobs that you have.
Yeah, I'd love actually. You've alluded to the WIP reporting a few different times now. We kind of refer to it around here as like kind of the backbone of all your financial reporting inside of Buildertrend.
Yep.
It's a feature that we have inside of our product as well too. Could you expand just a bit more, maybe if people aren't as familiar with that, of just what WIP reporting is and kind of how to set that up for their business?
Yeah, sure. In its simplest form, it's a snapshot of all of your ongoing jobs on one sheet. So you have your jobs going down the left-hand column, and then you have a snapshot of what the budget or the expectation of costs are on those jobs, where you are from a cost to complete or percentage to complete basis. How far along in the job are you completed? So are you 10%? Are you 15%? Are you 70 or 80% done? And then that also then drives how you recognize your revenue on the jobs, and also how far you are as far as what your invoicing looks like. Are you invoicing in advance? Are you behind on invoicing? And so it gives you a snapshot as far as, okay, now I know I'm 20% into this job. Am I on target? Am I not on target? And now I can evaluate that. If I don't see that until I'm 75% in, well, it might be too late to make a decision to impact what's happening on my job. And so it really gives you a good snapshot of progress on jobs, where your costs are compared to what you've budgeted, and then ultimately where your revenue is and how much you can and should be invoicing over a period of time as well. So that one report gives you an idea of what your cash flows on the job should look like, or if you're behind, or what your situation is. It gives you how far along in the job you are, and ultimately if you think if you're trending towards profitability as well.
Yeah, and to your point, like looking at that 2 months post completion of a job doesn't really give you a whole lot to work with there.
It's kind of like, well, okay, well, I guess we learned from that, and try to apply it on the next one. But really, we want to apply it on that one, right? So the more real-time information we have, the better decision making. And again, if we can find ways to carve out some extra margin, 1% is massive on a construction engagement. So that's what we're always looking at with our clients, is how do we find opportunities to identify opportunities for margin and profitability within the organization as a whole, on specific jobs, but then also within the organization as a whole.
Yeah. So that's interesting. I'm curious, what does a typical, and maybe typical isn't a good way to put it, but when you engage with a client in the construction space, what does that engagement typically look like? Is it people that already have a lot of this stood up and they come to you to help kind of, automate or dial it in? Or is it people that are just kind of getting started for the first time that don't know where to start? Or what sort of clients are you typically working with, and how far along are they?
Yeah, I would love for it to be the former, where they're dialed in and they just need some tweaks and some additional leadership to take them through. But in most cases, to be honest, it's actually neither. We're typically working with companies that have gotten past that beginning stage, but they've grown quickly and they've lost control of their financial management, and they're not getting good information. It's lagging. They don't trust it in a lot of ways. They have somebody within accounting and finance that maybe is in over their head. Maybe they were effective when they were smaller, and now they've grown. Oh, and that's the other thing in construction. General contractors can grow very quickly. We have a client that I think was started in around 2020, 2019, 2020. They went from, I think, 15 million to 35 million to 60 million, and now they're pushing 100 million. And so what the team that got you there at 15 million is not going to be the team that it likely should be there at 100 million. And so what ends up happening is the company outgrows either the bandwidth or the sophistication of their existing team. And so where we come in is we provide that sophistication, that we call it accounting leadership and financial leadership, to support and drive success within their existing team, so that instead of the company having to hire a CFO or a controller or somebody else, this gives them that flexibility, cost flexibility, and also flexibility in ensuring that we're really focusing on the right things. What I will say a lot of times is that business owners think, well, so-and-so told me just hire a CFO. They'll cure all, they'll save all, right? Well, a CFO should be there from a strategic perspective, but a lot of companies have an accounting problem, and CFOs are typically either don't have the skill set to roll up their sleeves and fix the accounting side, or they don't want to because that's not what they were hired for. And so they then end up having to bring in additional individuals to clean things up so they can support from a strategic perspective. And so that's what we try to do, is make sure that the strategic side is filled, and the company is getting that value. But a lot of these companies don't need that full-time CFO that they're paying $200,000 plus a year for.
Right. I mean, I think it's the same. It kind of is the same thought process when it comes to scalability that you were alluding to, where to scale the number of jobs you can do in a year takes an extreme level of intentionality. You have to find subcontractors that you work with that you can trust. You have to negotiate supplier contracts. You have to make sure that you have the right number of project managers and field crew people to support all these, dial in your scheduling. Like the example you gave of, scaling something from 15 million to 100 million, like that takes a lot of boots on the ground work and intentionality. And it takes the same level of work and intentionality to make sure you're scaling up your accounting practices and financial practices as well too. But oftentimes those kind of get left in the background, and you don't understand that you have the problem until it's too late.
Right. We see that a lot, is that it creates tremendous pain for a company once they get to that point, if they have not established that foundation. The other thing that's important too as companies grow is the financing and banking relationships. Many banks already don't even, they don't specialize, or they don't like to work with construction, general contractors, et cetera. And I think a lot of that is because of a lot of it can be very tied into the economy, and other reasons, and low margins. But from a banking perspective, as companies grow, they really need to make sure that they have thought through the process of, how am I going to grow effectively, and do I have the cash flow to do that internally, or do I need outside financing support? So there are banks that do specialize and have a construction arm, and so those are the ones we want to start with, and then making sure that the financial information and the conversations we're having with the bank leads the bank to understand and agree at the sophistication level of the company. The worst thing if a company wants to get financing or a line of credit is to just hit print on their accounting system and just send over information without making sure that it's in the right format. It looks credible. It's telling the right story, and that's where there's a lot of challenges. Is let's make sure that when we do bring in a banking relationship and we do go after a line of credit, we're prepared. We're providing the right information that tells the right story, adds to that credibility, so that the bank wants to establish that long-term relationship.
Yeah, that makes a ton of sense, especially with just all the variability, not only in the construction industry, but the economy as a whole and how closely those two are tied. Yeah. The context and the story you're telling with the data matters so much more than just printing out P&Ls and sending over, right?
Right. Yeah, and the reality is banks, they don't want to be transactional. Right. So if you've never talked to a bank and you meet someone and say, hey, I need a line, just give me a line. I don't really care. They don't, that's not their preference. They want to build a relationship. They want to have known you before, right? So even if you don't think you're going to get a line or need a line now, this year or next year, start building that relationship so that when you do need it, it's a lot easier. The bank knows you, they understand you, they trust you, they've seen you in the marketplace, or even maybe start to get a line now, even though maybe you don't need it,
right?
Because that starts to establish that relationship with the bank, and then over time, you can start to extend that line if you need it, and then tap into it if you happen to need it when you didn't realize you might. And so all of those conversations are critical, and that sophistication and how you communicate with the bank is critical in being able to actually get the financing that you need versus just saying, hey, just give me a line. I'm a good business. I'm growing. Throw some financials over the fence, and that's going to be a tough sled to get some good financial or to get a line of credit and a good banking relationship at that point.
Yeah. So if I'm a GC listening to this right now, I think a lot of, the experience I have of talking to people on here is things can work well for a really, really long time, and people don't understand or maybe don't even want to believe that things could be working even better. So if I'm a GC listening to this right now, what are some of the kind of key financial metrics that I should be tracking and monitoring on a regular basis that is, critical for business owners to understand?
Yeah, well, I would start. The first thing I would start at is I would be making sure I understood, why am I running this business, right? Am I running this to, what is my end game, right? Do I want to transition this to a younger generation, like you talked about before? Do I want this to be more of a lifestyle business? Am I happy with the revenue base that I'm at, or do I want to grow this and continue growing this forever? So all of that depends on how you operate and run a business, and also on the metrics and how you look at the business from a metrics and decision-making process. So that's number one. The second is the number one thing I think is most important from a day-to-day perspective is understanding the cash flows of the business. And what I mean by that is let's make sure I understand what cash flow, that I can project out cash flows and what my cash position will be over the next 3 months, let's say. And you keep rolling that forward on a weekly basis or at a minimum a monthly basis. And that gives me an understanding of, okay, here's the outgoing cash, here's the incoming cash, here's my cash needs. Okay, yes, here's where we do have to tap into our line of credit. Or, hey, you know what, things are a little bit thin. Let's start having conversations with the bank. We could probably get through it, but it's probably good as based on our growth trajectory that, hey, you know what, we do need to enter into some level of financing. So minimum, let's make sure that we have an understanding of what our cash flows look like as we project them out and continue to roll that forward. That's critical. And then the second, I think, is, again, making sure that you have confidence in your financials in a way that you can trust and develop a good, WIP report. I think you talked about it as the backbone of reporting. The WIP shows the metrics and the the progress of your jobs that are critical. Understanding what that then gives you a snapshot of what's happening, but then understanding the margins on each job and what the expectation of that margin should be, I believe, is critical. So then you can manage against that. But it really, for me, it starts with that WIP report is number one to make sure I have confidence in, and then look at each job individually. How am I bidding jobs? What's my expected margin? There's all different types of contracts between cost plus, and then there's government contracts, and then there might be all different types of contracts. So depending on that contract, really depends on how you might want to how you manage that job as well, though.
Yeah, I mean that's all gold, and I love the mindset that you started that with of first just understanding why am I in this business, right? Am I
Right.
looking to scale this? Am I looking to pass it on? Is it looking to be a life cycle business? I think having that proper expectation first is going to dictate every other decision you make down the line based on some of the other
Right.
things you mentioned as well too.
Right. Yeah, because if you're at 10 million now and you want to be at 50 million, your cash flows and your expectations on cash needs are going to be different than if you're 10 million now and you always want to be 10 million.
Right.
You to grow, a lot of times to grow you need cash, and especially in construction when you get paid when they get paid and it gets strung out, cash can be a challenge with growth.
Absolutely. We're getting close to time here, but a couple more questions I want to make sure we hit. Obviously, Buildertrend podcast. So we're very, very interested in technology
Yeah.
in the space. I'd love to hear your thoughts, not just on kind of project management software such as Buildertrend, but also accounting specific software as well. That's something that we're
Mm-hmm.
constantly making sure that we integrate really, really well with and understand the benefits of having that information sync into Buildertrend. Can you talk to me a little bit about just like the key, or not the key, but the importance of technology in the accounting space specifically for construction businesses? And no free shout outs, but obviously if you have some suggestions of systems that you typically work with, I think it'd be gold for our listeners to understand that as well too.
Yeah, I mean, with the accounting and the technology is critical, right? I mean, you have to have, at a minimum, you have to have something. And if you don't, then it's going to be tough sledding, obviously. Um, the What's important though is not just getting the good software, but making sure that it's set up effectively
Yep.
to be able to work effectively. And what I mean by that is, Buildertrend is an awesome platform, but if you don't set it up appropriately and it doesn't integrate appropriately into an accounting system, you're not getting the value out of it that you're paying for. And a lot of times, the challenge comes where the team that's using it just doesn't have the sophistication um, to be able to manage the accounting system with the construction management system and so on. And so that's where we come in a lot, is providing that leadership and that management to ensure that all of the systems are working appropriately to interface and interact within each other to allow you to get the best information possible. And so setting up the system in a manner in which will create efficiencies in how you do things is critical. A lot of times, companies they've been doing it a certain way forever, and that's the way they've always done it, and it's very inefficient, or it's very manual. We've seen a lot of situations where they couldn't get the system to work the right way, so they've created the sides Excel spreadsheets on the side, and
Yep.
okay, we're just doing this and this and this, instead of really taking the time to educate themselves on that system. So if you're going to invest in a system like a Buildertrend, take the time to get to know how to use it. It's a fantastic system, but take the time to get to know how to use it. Make sure your team is trained on how to use it, and make sure you invest in that piece, because you're investing to implement it. So let's make sure you're investing in your team to actually use it effectively and how it should be used. Um, in most cases, it's not the system's fault when the company is having challenges using it or getting information out of it, or saying, oh, well, it doesn't work, I can't get it to work. It's usually the user's fault because they haven't taken the time to invest in their team or the right people to use it. So from that's the first thing is no matter what system, make sure you understand how to use it, make sure it's set up effectively from the beginning, and test it effectively to make sure that you're getting the results that you want out of it. From accounting systems, we have a lot of clients that actually use the Sage products, contractor or construction, I think 100 and 300 or two of them. That seems to be, we do have some on QuickBooks, some smaller companies on QuickBooks. QuickBooks is not great for construction. To be honest, it's a platform for accounting, but even their construction module doesn't, is okay. But that's the most cost-effective solution. So a lot of companies use it. And if you have a system like a Buildertrend, it can really enhance and allow you to use QuickBooks for that much longer. So a lot of times it's not necessarily the accounting system; it's a system like a Buildertrend that really enhances the ability to take the business that much further, which is critical. So if a company is only using QuickBooks and nothing else, it's going to be very difficult to be able to effectively manage your construction practice.
Yeah, I just have to go back to the point you made earlier about setting stuff up properly, and give a huge shout out to our CTO, John Walker, who's a huge fan of the podcast. And I'm sure he's grinning ear to ear when he's listening to this right now. That has been his biggest push since he started a Buildertrend, of just changing the mindset of less training on how to use the platform until you get everything set up. Like, tools are only as good as they can be if they're set up properly. And you can be an expert in how to use them, but if the data underlying what you're using them for isn't dialed, then you're only going to get that much value out of it. So that's been a huge shift that Buildertrend has made really in the past 6 months, is when you sign up for Buildertrend, before you even get into the platform and start learning how to click around and where things are at, is making sure your data is set up. Even simple stuff like making sure you have the proper cost codes and the cost grouping and the cost items and everything structured the right way before you start implementing them into Buildertrend, has been a huge mindset shift that we're implementing. And to hear you say that and reinforce that statement has me grinning ear to ear too. So we're definitely aligned there.
Yeah, we see that all the time. It's implementations fail because of a disconnect between the team that's implementing it and the company that's trying to, and the company. And so a lot of times it's a lack of sophistication on the company side, because it's like, okay, well, the management just says, okay, bookkeeper, go, implement the system, and they don't have the sophistication to do that. And so that's where we come in, is we really bridge that gap in sophistication. And so we do support a lot of times our clients in different system implementations that touch accounting, because we have that expertise to be able to drive that process to ensure that things are being done effectively. It's set up the right way, the business requirements are identified, and the system is meeting the expectations.
I love it. Well, Jason, thank you so much for your time today. Before we sign off here, I would love if you could give our listeners just some quick info on where they can learn more about Signature Analytics and the services that you offer.
Yeah, it's signatureanalytics.com is the best way. You'll see our website. You'll see the drop down in industries. Construction is one of them. LinkedIn, you'll see a lot of information on LinkedIn. You'll see that we're very vocal there. Anyone can email me at any time. The letter J, Kruger, that's Kruger, at signatureanalytics.com. I like talking to business owners. Like I said, we have colleagues on our team that are much more sophisticated than I am when it comes to construction even. We have about 75 full-time employees. So we're not a staffing or recruiting firm. It's, hey, let's make sure we have the right team to support you and work with you, but on a flexible basis to give, from a cost perspective, but also from a value perspective.
I love it. Well, we'll make sure to link all those in the show notes as well, too, if people are listening and didn't have time to write those down. Jason, thank you so much for your time today. I learned a ton, so I can't imagine how much our listeners learned. Really appreciate you.
Thank you so much, Charlie.
We just heard from Jason Kruger, founder and president of Signature Analytics, talking a little bit about the accounting services that their company provides, but more holistically, just some basic financial principles that businesses across the country should be implementing into their processes. I loved his viewpoint of the work in progress report and ensuring that you have snapshots of that, every week, if not more often, and not looking at it retroactively, but using it as a tool to make proactive, informed decisions. I thought that was very, very valuable. I love talking about how to be proactive, working with banks and lenders about, getting lines of credit. I thought everything that he mentioned was extremely thoughtful and, again, proactive, and not just sitting back and waiting until an issue arises, but thinking forward of where do I want to be a year from now, 5 years from now, 10 years from now, and what do I want to do now to better set myself up for success in the future there. So extremely insightful. I took a ton of notes written down here. So Jason, thank you again for coming on today. That will do it for us for this recording. Thank you guys very much for tuning in. As always, like, review, and subscribe anywhere you listen to podcasts. That would really mean a lot to me personally. Otherwise, I will see you next time for another episode of The Building Code. I'm Charlie Burtwhistle. Peace. Thanks for watching the video. Remember to subscribe to our YouTube channel for exclusive content brought to you by Buildertrend.